Hi everybody, Brian from Bear Bull Traders here. It's the weekend, October 29th, Halloween weekend. Hope you're all having a good weekend. And this is, of course, the weekend video. We'll take a look at what happened last week in the markets, and it was another pretty crazy week. And we'll take a look ahead. We've got a huge week of earnings coming up. This, I think, is the busiest week in terms of number of companies reporting. So let's take a look at what's going to come down the pike this week. Okay, let's start out with taking a look at what happened last week. Another Friday fun day on the markets here. PCE inflation report came in pretty much as expected, right in line, and I guess everybody was happy that it didn't come in hotter than expected, so that kind of gave investors and traders some hope that Fed might be getting up to a point where they may reduce or stop tightening. So again, some optimism there, maybe whether it's deserved or not. And on the week, we had the big cap names reporting: Meta, Amazon, Google, and Microsoft. Basically got bludgeoned on the week, each one of them, after their earnings reports and calls. But Apple did seem to get a favorable response from investors after their earnings report. So Apple fared the best there. Obvious rotation of money. You can see the money rotating out of tech, like we just mentioned, and seems to be going into the old money stocks. Like if you looked at CAT and the old money Dow stocks, CAT and 3M and IBM and all those old money stocks, they seem to be the ones that were catching the bid this week. So money rotating into the Dow, and you can see that reflected in the indexes. Dow putting in a 5.7% gain on the week, and that's the fourth week in a row the Dow has been up. Qs did manage a gain, 2.1%, despite the big misses from all the big name stocks. S&P up 4%, just under, and the IWM reflecting an optimism in the market that maybe the Fed tightening is done, up to over 6%. So best performer on the week. Areas of strength and weakness: well, utilities, real estate. I could have thrown Staples up there, but clearly the defensive names were the most active on the week in terms of upside potential or upside. Communication services were the only sector in the red. Of course, that has Meta and Amazon in it, so not surprising it was down. As far as the treasuries go, we had a flat week on the 2-year, didn't really change much. 10-year did pull back a bit. I'm not sure if that's just a pullback in a longer term trend higher, but we'll take a look at the chart in a minute. And the US dollar, again, it dropped, which was good for, obviously, the Dow stocks, which most of them get revenue from offshore, so a cheaper dollar is better for them. And Bitcoin. Bitcoin was interesting because it actually broke and held above 20,000 here this week, so 19 seems to be the floor, and maybe we're getting a bit of a pop-up here. We'll take a look at that chart in a minute as well. All right, before we start looking at some charts, again, this is always a good time to slip in a quick plug for my book on Amazon. It's called Profiting as an Active Trader. You can see it there. Money management rules, strategies, and routines of an active stock and option trader. A little bit of stuff on options in there as well. So if you have a chance, there it is. You can check it out. So let's get over to look at some earnings here. Not earnings, but... And as always, we'd like to start out by taking a look at the treasuries, because they are sort of driving the market to a certain extent. And you can see here the 2-year is kind of flattening out. We didn't down a fraction here on the week, but pretty much the same, sort of around that 4.4% on the 2-year. The 10-year really did pull back here. So I guess the question is this just a pullback in a larger trend, which we are still definitely in an uptrend? This pullback this week is not a trend change, but we can see here we did get really overbought in terms of the momentum indicators, and both on stochastics and RSI. So a retreat here or pullback was well overdue, and again, it could be just a pullback consolidation just to resume higher. But maybe there will be some indication that the Fed on Wednesday will indicate that they're going to slow or stop the rate hikes. It's unlikely they're going to stop them because we know they're waiting for more than one. They're looking for a trend, not just one indicator. In the PCE number that came out Friday, well, it was as expected, but still way above their target price. So I'm not expecting them to stop raising, and I suspect that we are still going to be in a bit of an uptrend here, or at the very least consolidating. Transports, great week. We've just had a really nice pop up here on all the indexes. It's here at a nice day on Friday. Again, really good week overall with the transports. Again, broke out through this level here, and broke out through this moving average. So, and we know that November is always or not always, statistically, it's been a good month. I think about the last 20 years, about 80% of the time, the November markets have been up. So this may continue higher here as we get through the month of November. The Dow, again, really nice week. I already mentioned this. I mean, the Dow has just been on a tear, if you want to call it that. Fourth week of gains, and of course, look at these 5 days, all up days. Pretty much, it's just taken off here, and money has definitely rotated into the Dow here, Dow stocks, and there's only 30 of them. So just remember that. And you can see here, look at this nice volume building here. Big move up. I'm expecting we are into an area where there should be some resistance here, right around this 33,000, 33,100 moving average, prior support here, prior resistance here. So I suspect that we're getting pretty long in the tooth on this pop, but again, any good comments by the Fed on Wednesday could fuel this to go higher. The Qs, again, struggling to break out here. This is an area where 285 is definitely an area where should be some resistance. The Qs, again, not doing well in a rising interest rate environment. Again, you can see here, volume not very good either. So, not a lot of institutions sort of buying into the Qs quite yet. And we are still in a downtrend. So regardless of this little pop, this is still a bear market at the Qs for sure. The SPY, again, great day on Friday, probably driven in part by some of the comeback from the stocks that got beaten up, the big name stocks that got beaten up, plus Apple obviously coming in and really catching a bid there. So we are pretty overbought on stochastics. Momentum still to the upside, but again, coming into an area where there could be some resistance here and maybe due for a little bit of a pullback. You see right at resistance, prior support here, and an area where we broke down from pretty significantly there. So, and the IWM, as I mentioned already, IWM, this is the small caps tend to do best when we're coming out of what to call it, a recession. Not even sure. Some people are debating whether we actually are in a recession as of yet, but we had expanding GDP growth, I believe, report come out. So we had two back-to-back down, and now we're back up again. Again, IWM looking pretty good here, and this 200-day moving average probably your next area of resistance. On the IWM, again, we've broken through a few levels of potential resistance, and the moving average, this prior level here, and it's looking very good for a continuation on decent volume. The VIX, not surprisingly, just took it on the chin again on Friday, and we are back into an area, probably this 25 area, where we'll maybe find a place to bottom out, but all the momentum indicators on the VIX are down. So keep an eye on this. Stochastics may start to, it's really oversold here, so we could find a bottom here. Again, kind of pointing to, we're getting into a little bit of an overbought area on the markets, a little bit of an oversold area on the SPY, so maybe a little due for a little pullback. But we could well be into a bull market bounce in a bear market here, continuation into November. And the dollar off quite a bit on the week here. You can see it was up a little bit on Friday, pulled back again, and on the weekly again. Really, we are flirting with a breakdown on the dollar in terms of a trend. You can probably, without me putting the line on, you can kind of see it there. It does look like it's breaking trend a little bit if I put a line up there, but again, this 30 level now, resistance and sort of 29.50 support, and some pretty significant volume on the dollar as well. Bitcoin seems to be breaking out here, as I mentioned on my previous slide. You can see here this 19,000 level, just under 19,000, seemed to hold a few times, and now drew this line here, this trend line. We do seem to be breaking out of this downward sloping trend line. And the question is it going to break through this, let's call it 21,800 level? It's getting really close to it right now. So this would be, if it can break out of this, this would be, again, another positive sign that maybe we are starting to go into an uptrend. And you can see here, volume's actually picking up on it. Stochastics are turning. So I would watch Bitcoin next week. Could be a potential breakout. I'm not understanding why, but there it is. And some stocks on watch for next week here. This is Apple. Again, brilliant day on Friday, gapped up a little bit and then just went off to the races here and really just basically stalled out at the 200-day moving average. And we'll see what happens on Monday, but I was kind of mentioning watch Apple, sort of as goes Apple, so does the market. But you can see here we're kind of into an area with this 200-day moving average and this 157 area where we topped out. This is sort of a predictable area of resistance, and we'll see what happens to that next week. But it's been a nice move on Apple and on volume. So again, I'd be looking for maybe a little bit of a pullback. I'm still watching COM. I do think it has some potential. I'm looking for it maybe to pull back a little bit more to 55, possible entry there. I'm looking at LABU. The healthcare sector has just been on fire. The biotech's not so much, but LABU could be, it's sort of trading in a range here, and I'm watching for it to break out of this range. We're at this moving average. We're at an area of prior support here, became resistance here and here and here. So if we can actually break through this on Monday, it's could be a long. Only thing I don't like is the volume on Friday wasn't great. Momentum is starting to pick up to the upside. You can see all the momentum indicators, and looking like it actually might break out, and then we could get back up into the 8.5 or the 9 area, even 950 for a bit of a run there. Again, with the IWM performing so well, I'd be keeping an eye on TNA. TNA is a way to play the IWM, except it's a beta ETF, so you're going to get three times the reward, but you're also taking on 3 times the risk. Same with the Qs. The Qs do look like they're lagging. If we do get some hint of maybe relief from the Fed on future rate hikes, I think the Qs will really start to respond positively. So again, this would be one to watch. And you can see here this 2250 area is prior resistance, both here, here, here. So I'd be watching if it does break out there. That'll be definitely a good sign. Tesla, again, maybe we'll catch, it does seem to be breaking out a little bit, momentum going up. And the Dow again. This is the UDow. It's an Ultra Pro. It's a way to play the Dow. It's already had a big run, so I'd be looking at this sort of, if it does gap up, this sort of 58, 50, this 58.80, 59 level is probably going to be an area where you will see some resistance. It's also the 200-day moving average on that chart. Still watching uranium. This is XLE. I thought I'd just throw this chart up. This has had a monster run, even though Oil has pulled back. We had some really great earnings out of Chevron and Exxon on Friday. I think Exxon at a record high, but this is sort of a bit of a topping pattern here. And again, not surprising because we're back up to these highs here. So watch for a little bit of a pullback on energy. Again, healthcare. The healthcare stocks have been really doing well, and this is a weekly. You can see here had a big week up. Volume was terrible though. I mean, if you look at it, it's been declining on these moves up. So I'm not convinced we're maybe going to push out through here unless we start to see more volume. And that's it, everybody. So wrapping things up here, what we got coming down the pipe this week. There are your levels and corresponding support and resistance. And you can see here what we've got in terms of economic data. We've got a PMI on Tuesday at 10 a.m. We do have that much anticipated Fed meeting, although the rate hike, I'm pretty sure most people have this baked in at 0.75%. I think it's going to be, a lot of it's going to depend on what the Fed says during their interview. And if there's any hint that they may be rolling back on future rate hikes, that will be a fire that'll be lit under the market. U.S. jobs, we've got a lot of stuff coming up on Friday with U.S. jobs data, unemployment, non-farm payrolls, and wages. So that'll be something else to watch in terms of how things are looking from an inflation perspective. And as I mentioned already, we've got a ton of earnings coming up this week. I think this is the biggest week for earnings in terms of number of earnings coming out. So you can see them all there. So that's it, everybody. Going to be another great week. And of course, we're all going to be down in Florida for a meetup on Wednesday. Should be a great event. Other than that, Monday we should be in the trading room. 8 o'clock, we'll be starting out with the pre-market show and trading the market open at 9:30 with our members. So have a great weekend, rest of the weekend, everybody. Stay safe on Halloween, and we'll look forward to seeing you all in the morning, Monday morning. And if you're coming to Florida, look forward to seeing you there. Bye for now.